So thanks again for the opportunity to present. MicroCap. This is our first time presenting this story. Geodrill. I don't believe I've ever actually presented anything in Vegas. Actually, usually come to Vegas, go to the boxing maps and fun tables. So Geodrill is a leading exploration mineral driller that provides drilling services, and we operate in West and North Africa, predominantly in Ghana, Burkina Faso, Ivory Coast, Mali and Egypt. We also recently expanded into South America, specifically our customers are major, intermediate and junior exploration mining companies, and our model is flexible, which enables us to work with both or either at the same time. We drill for gold, we drill for base metals, and we drill for EV metals, electronic vehicles, which are all the rage at the moment, I'm sure you're aware. So we have a very unusual situation at the moment where everything seems to be going very well at once. Now, nearly all miners have been citing the need to shore up depleting reserves. Your information, gold reserves are down 42% from the peak of 2011, and to make new discoveries takes many, many years. At the current spot price of $1,850 gold, this is well above the critical support levels of greenfield exploration, particularly when you consider the free cash flow which is being generated by some of the miners. Now, drilling, you need to know, is a cyclical business. As a typical sort of garden variety picks and shovels business, we tend to mirror the same trends that the miners do. But drillers are a great way to invest in mining, and I say that because we speak for the largesse of exploration budgets. FYI, approximately 50% of exploration budgets goes into drilling. The drilling industry is currently entering an upcycle, and as a result, unsurprisingly, most drillers are reporting increased utilization and strong financials. For example, this company, Geodrill, recently announced its 2021 fiscal year results. This was a record result, our strongest year ever, and come next Monday, we'll be announcing our quarter one results, and for the first time our investors will be able to see how the landscape is continuing to pan out. This is our disclaimer. Lots of words there. It says if you don't like risk, don't invest. If you don't like risk, you probably shouldn't be in Vegas. Period. So a little bit about the story. I founded Geodrill 25 years ago with one rig and one contract. We quickly went about establishing ourselves as a formidable drilling outfit. It was a very different market back then. The big corporate drillers were sending their old, worn-out equipment to Africa. I looked at this a little differently. I thought to myself, well, this is going to be the primary market for Geodrill. Then best we send modern high-performance equipment. So we did that. And so since the get-go, this, it's really been a mission statement, one on quality and quantity, and also listening and, responding to customers' needs. It really was a simple message, a simple recipe, and it's proven to be a very successful one. We tend to pride ourselves on providing the full gamut of exploration drilling services. We do this using a modern high-performance fleet of drills, and also by providing our customers with solutions such as providing multi-purpose drills that can perform both reverse circulation and core drilling. So I'm not sure how many of you in the audience are familiar with that. Esoterics of drilling. I'm not about to stand here and give you a drilling expert presentation, but basically what we have is one rig that performs two methods. So for our customers, it's total no-brainer because it reduces the requirements of drills and less personnel. It's basically just a cleaner, quicker, more cost-effective way of doing things. And this has proven to be very, very successful, and it's resulted in very high rig utilisation. I'll throw a quick comparator out there. Our rig utilisation fleet of the rig that's currently busy is about 75%. Industry is currently about 45 to 50%. So it gives an indication of how much more in demand our rig fleet is. And the result is that the markets that Geodrill operates in, because we are in high demand, we actually speak for about 30% of the key markets that we operate in. There's a lot to keep drilling rigs going where we operate out there in West Africa. That's where I live, and where, that's the rock base of business. I actually live in Ghana, West Africa. I've lived there for about 30 odd years. And that's where I've flown in from pretty much a couple of days ago. What you're looking at here is, this is our major support facility. And as I say, you might care what the workshop looks like, but if you don't have one of these out there in Africa, you break down, you're going to be down for quite some time. This is the beachhead of our operations in Africa. Inside the facility incorporates a world-class workshop and training centre. This is where we train our young drilling talent and where we keep our rigs all maintained. It's also where we keep our inventory of spare parts, critical spare parts, to keep our drills going. Inside the facility also we have a CNC engineering facility. This enables us to make our own drill rods, our own drill bits. We can even make drill rigs. So it's something of a vertical integration model. And outside the other areas where we work further away from what we call the hub, we have spokes. And a typical spoke for us would be about 12 hours away, one of our outlier regions. The importance of this facility is that it enables us to operate with a mechanical utilisation availability, if you like, of 95%. And that's one of the best metrics that you'll probably ever read about any drilling company in the world. We have a simple saying: keep them turning, keep them earning. Just want to talk about Africa for a minute. Why Africa? So, way back in inception, the thing that I found compelling about West Africa was that the region had missed decades of modern exploration. Now, that was 25 years ago. And nowadays, West Africa is becoming a mature market, dominated by leading names such as Newmont, Barrick, Goldfields, Anglo Gold, all the big guys are there. And so the point that I'm making is that anyone not invested in West Africa is missing a substantial piece of the pie. Anyways, over the years we've managed to build a strong brand, and in 2019, Geodrill became the largest exploration driller in Africa, and we're currently the seventh largest in the world. In terms of meterage, we drill meters. That's how we make our money. We're paid by the meter. Last year we drilled 1,800 kilometres of drilling. Okay, so a lot of meters. That's like driving from here. Is 1,800 kilometres away. That'd be like driving to Alaska or something. Can you even drive to Alaska? I don't know. It's a lot of meters. That's the point that I'm making. And folks familiar with the sector will understand the importance of that meterage, because drilling is a numbers game. The more you drill, the more you find. Hopefully that's the case. So success tends to beget success. And hopefully when our customers drill more, they'll drill more with Geodrill. The point is that whether or not the customer finds gold, doesn't find gold, the service company, the drilling company that picks and shovels business gets paid by the meter. So for that 1,800 kilometres of meters that I mentioned, 1.8 million meters, we get paid for every meter. So what's all that mean in terms of financials? Well, highlights of our fiscal 2021. So we capped off fiscal 2021 with outstanding momentum, delivering on all key metrics and by strengthening also our balance sheet. We generated record revenue of $115 million. We also generated record EBITDA, $29.5 million, 55% year-over-year increase, and record net income, $14 million. That was an 88% year-over-year increase. As a result of these three record feats, we achieved for our investors a return on capital employed, ROCE, 22%, and an ROE, return on equity, 16%. And that's up from 14%, 10% for the corresponding respective year ago. Now, Geodrill's balance sheet strength, also continues, also remains one of our differentiating advantages, with net tangible book value up 18%. Shareholder equity, $87.5 million, that's up 20% year over year. We ended the year with net cash, $2.4 million, and that's decreasing our debt by $3.4 million. And we delivered through the year a 2-cent Canadian dividend. And since releasing these results, we have announced annual dividends, 6 cents Canadian. Based on today's share price, that's about a 2.4% yield. The bottom line is that our strong balance sheet with low leverage well positions us for future organic growth. So, in conclusion, we believe there are several catalysts that will make for the next few years transformational for Geodrill. The cycle is turning, and Geodrill is benefiting from improved gold markets and sector rotation. We are seeing the benefit of diligent growth decisions, including increasing our rig fleet even during a down market. We are expanding into high growth markets such as Egypt and Peru. So the long-term outlook is very positive, and increased utilization will continue to drive strong free cash flow and expansive initiatives. Evaluation-wise, I think that's probably all interested in here. The stock. Geodrill stock has done reasonably well. I think from about a year ago, about 30%. But to be fair, in the past year, our revenue is actually up 40%. However, data is up 55%. And our net income is actually up 88%. So, in fact, over the last 3 years, on average, our earnings per share has increased by 77%. And at the same time, our share price has only increased 23% per year. So, the point that I make there is that there's still a lot of deep value in this Geodrill story. Of course, everyone that stands here will tell you that their story is undervalued. This story is well and truly a deep value story on the back of a very strong earnings story. So that's it, the Geodrill story. Great business, right geographies, and great prospects. Thank you. Please consider. Sure, if there's any questions.
Just with respect to what are you seeing looking forward in the industry? You mentioned free cash flow for a lot of gold companies. You've seen the board building up. A lot of companies looking at spending money on capital.
Yeah, I think I referred to it in one of my earlier slides that what's happening at the moment is, so with gold mining, the global market for gold is about 3,500 to 4,000 tonne per annum. And we've been producing that level. The industry's been producing at that level pretty much the longest time. But what has been happening is whilst that depletion has been going on, new discoveries have not kept pace with that depletion, and hence we're starting to see very strong gold at $1,800 to $1,900. Makes for a very interesting proposition for our customers because the all-in sustaining cost in West Africa is about $1,000 an ounce. So they're making, they're churning out kind of 50-60% margins. And in order for them to continue to grow their business model, they need to increase the ounces that they mine. It's an interesting business, gold mining. You mine an ounce of gold, you take an ounce of gold off your balance sheet. So you have to replace it. And that's what drives this business. Where we're currently at the moment is going to global production will peak pretty much now. And from here and going forward, global production will tail off at about 8% per annum. And the reason for that is not for the love of wanting to mine gold or the commercial viability of mining that gold. It's just not there to be mined. And from the discovery of the deposit, the first hole discovered, to mining, it takes approximately 8 years. So I verily believe that we are on the very beginning of an upcycle. I believe that upcycle will probably last for 6 years. And I can say that with some confidence because the down cycle that we're just coming on was about 6 years. And the cycles tend to mirror each other either side of the parabolic and cyclical business. Well, certainly that's been the experience of the 35 years that I've been in the business. So I think that it's going to be game on for miners. It's going to be game on for drillers because they're the guys that there weren't never a mine out there that found itself. They want to be drilled. All going to be drilled. And so whether it's the miners or the guys that do the assays or the people that provide the catering or the trucks or the labour hire services, the entire industry is entering a super cycle. And I think it's going to be very interesting times ahead. I've operated this business. Where this business has been a little different, where we've really differentiated ourselves, is we've managed to get busy through the down cycles. And I would say that this cycle is looking very interesting. But through the good and the bad from that first rig, 1998, one rig, one contract, this actually just realised I hadn't mentioned in my presentation. This has been a 100% organic growth story. From 1998, we generated about $800,000, just shy of $1 million, 115. And that growth trajectory is going to continue. Analysts sort of got us kind of predicting it will do about 130 USD this year. It's about a 10% year-over-year increase. We're very comfortable with that. But I think here's the challenge, is in maintaining that growth and being able to continue to deliver 25% EBITDA margins. And that's something we've always done very well. It's something that we will endeavour to continue to try and do. I can't talk too much about quarter one, which will be announced on Monday, but do keep an eye out for it. As I say, I can't speak too much about it. I have to say that our analysts are predicting a strong quarter. I wouldn't come all the way to Vegas to tell you any differently. So, yes, sir.
Yeah, so, sorry, or said what is your total debt picture at this time?
The total debt with Geodrill. Total debt as of today, I think it's about 10 million USD as against a balance sheet north of 85, 90 million USD. So our debt to equity is kind of in the 8 to 10% range, and that's, I'm not a big fan of debt, I'll be honest with you, but we do use it where we have to. I should also point out that that is the total debt, but we actually have net cash. So we have talking about the quarter of year. We ended 2021 with
about 4.6 million.
yeah. So we're in cash. So we don't have a debt problem. We don't have a debt problem.
It doesn't sound like it, but what would be the plan for if next year looks maybe 22 looks better than 21? What is the plan for the free cash?
So there's a number of things that we can do with our cash. We can pay dividends, which and for those investors that like dividends, we just initiate a 2% yield, 6 cents per year, which we've already paid 3 cents on. And the best use of cash for us, the other thing is we can buy our own stock. We have a planning program, and we can do that. The best use of proceeds for us, the best use of our cash generated from operations is to continue to buy rigs. That's what we've done since day one. We started with one rig, 100% debt, paid that down. With the cash generated from operations, went out and bought another rig. So on. So 25 years. We went public in 2010. And at that point, we had an injection of cash. And so with that cash, we bought more rigs just in time for a downside. We went through the down cycle reasonably well, probably one of the best going, company performances through a down cycle. We were the first ones to start generating cash in that down cycle. We've been cash flow positive since 2016. And since 2016, we've been using our cash to actually buy our competitors 20 cents in the dollar. Since we've managed to move the rig fleet from what was 37 rigs on the outset of the down cycle to 75 rigs as we currently speak. That was all 100% organic. We had never done an acquisition. So the best use of cash for me, buy more rigs, which drives revenue, which continues to drive free cash flow, which continues to drive all key metrics. Sorry. No.
Sorry. So then the competitive landscape, is there kind of also acquiring these rigs? I would think.
Sure. It's a really competitive landscape that we operate in, but here's the thing: we're the leaders in our industry. We're not the biggest, not by any stretch are we the biggest. We don't want to be the biggest, because with big comes problems. Where we truly pride ourselves is in the fact that we have actually one of the smallest fleets, the most profitable fleets. One of the other big drillers put out the numbers last night. I was reading that they got 300 rigs, we do 75. They do 2 times our revenue with 4 times our rigs. EBITDA, we double their EBITDA and they have 4 times our rigs. So it's never about, it's never about our biggest that I'm going to find. So,
yeah.
Just got 1 minute.
Apologies if you covered this, but day rate trends, and I don't think that may be the right metric, but this year versus last year.
Yeah, it's a good question actually. Where's drilling pricing heading? Currently we're seeing about a 10-15% kick in pricing, and that's slightly covering an increase in costs and some. So as the pendulum moves in the direction of a supplier's market, I've just got 1 minute. I have to hand over here, but as the pendulum moves in a cyclical business, suddenly comes to I don't like to use the term the dollars market in case some of our customers are listening, but you get what I mean. So that was great. Thanks a lot.